What's good, guys? Welcome back to the channel, and today's topic will be why market structure is a myth, at least how most people use it from what I usually see, especially in the SMC community. I often see market structure being used, in the wrong way, because the market doesn't really care about your market structure. Because one of the main things the market is caring about is liquidity and not market structure. Because the market is not moving because of your structure. Market structure is a reactive way of reading price, not an anticipative way. We as traders, we anticipate price. So if we rely based on reactive concepts such as market structure, then we don't get a full picture and we lack the overall narrative of what is going on in the marketplace. If we take a look here at this pound daily chart, then we can see here this run below those lows here. And I've seen many people calling this a market structure break, especially some SMC educators. They've been calling this a market structure break, which is quite funny because this was, probably the most obvious manipulation we have seen on Pound in the last few weeks. I also was anticipating this live, so everything I'm saying actually was calling this out live. And I want to give you guys a breakdown of why this was a manipulation and not a market structure break. Because most of the times the so-called market structure breaks are nothing but a manipulation against the higher time frame order flow. And that's already the keyword, the higher time frame order flow. Pound run those equal lows into this fair value gap. Also, as well, we have this daily inverse fair value gap, right? We have previously used this level as resistance. Now we got above, and we got now a stop run into that inverse fair value gap, lining up with the daily fair value gap on the buy side, right? So I view this as a manipulation to then continue heading into this upper fair value gap, buy side here, and obviously the buy side above those previous year's highs. So especially with the SMT, we will most likely confirm here between euro and pound at the lows here, right? I view this as a manipulation against the higher time frame order flow to then continue into our objectives, right? So that's what I'm expecting. This move on Friday was an NFP, just a manipulation to sweep all those longs which build up on in this accumulation, and also to trap sellers anticipating now pound to reverse from here again, right? Especially my fundamental guys, they're probably shorting now this down close candle, and then they get stopped in the coming days. Let's break it down in theory. So how can we anticipate if it's going to be a true market structure break or an actual reversal, or if the so-called market structure break was just a manipulation to then continue the present order flow? And to understand that, we have to go all the way back to why the market is moving in one direction. And it's because the market wants to take out either buy or sell side. So we have above all highs, we have buy side resting, and below old higher time frame lows, weekly, monthly, even yearly swing lows, we have sell side resting, right? So those are always the main liquidity pools, old highs and lows, and also you can find internal liquidity within fair value gaps. But again, if you go one time frame lower on where the fair value gap has formed, then you will see that each higher time frame fair value gap is built by lower time frame old highs and lows. Let's say we have here an old high and an old low, and price has been taking out, let's say, this old low, then we have been consolidating below, and then we saw price leaving that consolidation and then starting to expand higher, right? So we could frame this as the reversal of a potential market maker buy model. So we've taken out the sell side, and now we have the buy side. This can be daily time frame, weekly time frame. It works on all time frames. Right? All those concepts are fractal. And we can see here now, price left the accumulation. We have the infamous double sweep we always use at the lows. So we sweep the higher time frame low twice. And then we see a change in order flow. This can be the formation of an order block here, the violation of some fair value gaps inside that recent leg down, or one form of change in order flow can also be a market structure break when price is closing above the previous high. on a closing basis. Now let's say price is then continuing going higher. We form here the low risk buy, right? If we frame a market maker buy model, the first opportunity to go long after we see the reversal is always the low risk buy, which would be forming here in that case. And we form the low risk buy, and then we see price expanding higher. And now what is going to be the bias for the coming time? We expect price to trade into the buy side. Why? Because we have taken out the sell side, then we get a bullish change in order flow. We still have the buy side resting above, so the bias is higher prices, and order flow is confirming that bias. So that sets the stage for a high probability framework to look for trades when the order flow is confirming the overall bias, which you determine by where liquidity is resting, in this case, buy side. But price is moving higher, we go higher, and we form a new higher high, and then price starts to retrace, right? Now in this case, what is price doing? We have seen expansion, and obviously the markets don't go up in a straight line. On the way, we always see retracement. So price forms a high. In this case, you would call this a higher high according to classical market structure. And then we see price retracing, and then we form the so-called higher low, right? And price forms the higher low, and then is going higher, making a higher high again. So now, as mentioned, price usually does not move into the buy side in one straight line. We have retracements along the way and also stop runs. So in this case, we have formed a weak low here, right? It's a swing low, which has not taken liquidity of a previous swing low within that range. We form a swing low here, and then what you can see here, we maybe take out the buy stops resting above this high, and then price starts to reverse. And at that point, that's where classical market structure often fails if you're not aware of that theory. So price runs lower, takes out the sell side liquidity resting below that low here. We have now internal liquidity resting below that low here. And price retraces maybe into a discount of that dealing range we have formed. We have the range low, we have the range high, and maybe price is seeking a discount to then reaccumulate here. So we have offset reaccumulation below that low in a discount. We maybe even have an inverse PD array from the former sell side here. Let's say we went all the way down here, we left behind this imbalance, and now we, on the buy side here, we have inverted this imbalance, and now we have this inverse fair value gap. Maybe we have a fair value gap on the buy side here as well. So we have PD area alignment, but overall we have here a stop run into higher time frame key level, right? Now, is this a market structure break or is this a run of stops? Again, the bias is to see price trading into this high here. And until we take out that buy side, our bias remains bullish, and all so-called market structure breaks are viewed as a manipulation to then continue the higher time frame order flow and reach into the final buy side. And obviously, along the way, we could see again the same thing happening, right? We go higher, take out the previous strong high, then we again retrace, we engineer internal liquidity below that low, and then price again sweeps the low. Maybe we have again a key level here, a BPR for example, balanced price range, right? Bearish value gap, bullish value gap, weak low above, manipulation, and again, that's not a break in market structure, that's just a manipulation to then again to take all the liquidity from the sell stops resting below here to then have enough fuel to take out the buy side resting above this higher time frame high. So that's how markets are moving, right? You can see this happening on the daily time frame all the way down to the minute time frame. It happens on all time frames. That's the engine of the markets. Now we go back to the pound USD daily chart. Again, remember what I just taught you in theory, and now we apply that in the live markets. So what do we have here? We have a higher time frame low, which is a weekly or even a monthly swing low, right? A monthly swing low, which we have taken out last year, or actually this year in January. We take out the low, and then what do we see on the weekly time frame? We have this bearish value gap, which we close above, and then with the next candle, we are creating a balanced price range, and we overlap bullish value gap with a bearish value gap. So that is the first sign of a weekly bullish change in order flow. Now, where do we have buy side resting? with buy side resting above this previous year's high. Also, if you view this range, we also have the buy side resting above this swing high. Now, let's go to replay. And as mentioned, we have now this weekly BPR. What I told you, if we go from sell side to buy side, we form the reversal, and then the first chance to buy is the low risk buy. So now if we get a retracement here, we want to see the low risk buy to form here and then see expansion higher. So the first opportunity to go long on the weekly time frame would be here, right? Let's drop down to the daily. And let's see how price is behaving. And again, if we break it down to the daily, what do we have here? We have buy side, sell side taken. We have the reversal here. We have a weak low here. So we break through that swing low. Again, if you mark out the fractals, all those triangles, they now represent a swing high or a swing low. The white ones are the ones which have taken liquidity. So in this case, for example, that's a weak high. This one swept that high, so this one is a strong high, right? Pretty easy. Now we swept the lows here, and we do expect now continuation into those daily highs, and then we have this first higher time frame weekly high. As you can see, price going higher, takes out this high, and then we get a retracement again. Internal. Weak low, swept. Now the next bias would be to look for longs into those highs. There we go. And then now I want to see, okay, can we get continuation into this high, which was the next weekly swing high? So we have now those lows here, which could get swept, weak lows. Funny how that works, right? Low taken out, and now we are at this high, right? Now, keep in mind the weekly time frame. Let's check the weekly. We expect still a continuation into this weekly high here. So what do we have here now? We have this fair value gap, which we previously used as resistance here. We're now closed above, so now if we get a retracement here, we want to see the weekly time frame to expand higher from here into the buy side above this high. We go down to the daily again. Remember, that overall is the weekly time frame target. And as long as we don't take out this weekly high, our bias remains bullish, and we view all runs below weak lows as a stop run to get fuel to then go higher again. So that's reaccumulation of long positions below the weak lows and then continuation into the highs. And now let's see if we can get another leg of expansion higher. We mark out those weak lows here. As you can see, resting right above the key level I was laying out, also in the theory example. And we also have daily fair value gaps here on the buy side. So we have that exact PD area alignment, which we have on the sell side, inverse fair value gap, with fair value gaps forming here on the buy side. Consolidating now above those equal lows. And we see price going higher and making a new higher high, right? We have previous high, new higher high. All right. Now keep in mind all the things I just showed you guys. If price runs below those lows into that weekly and daily key level, is that a break in the market structure to then look for lower prices into those lows? Or is this more likely to be a stop run to then see price trading higher? It's more likely to be a stop run, right? And there we go. You can see we sweep the lows, we close below, and that's why most people panic then, oh, market structure break, we close below. No, it's not. It's just a manipulation to then have enough fuel for the final leg up into, first of all, this previous old high, and then the weekly buy side. You can see we go higher, and that's where we are trading right now. So obviously the bias remains for the time to come to be this high. Large expansion, so ideally what I want to see is a consolidation, and if you form such a new low in the coming days and then sweep that low, then I will be looking for more longs on pound into those highs. So considering we are quite close to that high, we'll be seeing if we get a large retracement. But if we get the same pattern as here, we form a weak low, we have here the value gap, we have the breaker here as well. If we form a weak low above and then get a manipulation below that weak low, then I want to frame continuation longs into those highs. And now you also might see the problem why using market structure to create your bias is always reactive, because if you view this as a market structure break and then you want to short the retest, then you are trading reactive and you ignore the higher time context. But as a trader, and you want to anticipate where is price going on the higher time frames, and are we currently being in a manipulation phase to then see expansion into the higher time frame target, and this helps you to then frame those high probability trade frameworks. And if you want to see those things getting broken down each day, each week live, then check out the first link in the description below. You can find there a link to the SEN Capital Discord server. The signups for the upcoming month are open right now. And inside there are daily live streams where I show you exactly my anticipations of what's going to happen the next day. So if you want to join there and learn all those things in the live markets with my guidance, then yeah, check this one out. I hope you could learn something again from this video and why market structure is reactive, but you need a proactive narrative to be on the right side of the market. And if you actually learned something, I would appreciate a like and comment down below what else you want me to show you guys. And yeah, see you guys then in the next one.